Welcome to Momentum Monday. Today is August 6, 2023. Howard, how was your weekend?
Dude, I am loving life. I am finally in my home. Can you see?
Yeah, looks beautiful. Looks
In
like
my
a Japanese
picture.
house.
Yeah, it's a little bit. We went lighter. We modernized though. It's beachy modern.
I see your credit score in the background, Howard, 630.
That is a piece of art, internet art, that I think I bought in like 2007. There were 1,000 made. It's kind of like an original NFT before NFTs.
Yeah.
I have no idea what it's worth. There was only, 999 of those paintings. So I have number 630, which was, I don't know what the significance,
It's
630.
Max's birthday, Howard, right?
No, he's April 30, so he's 430.
Oh, okay.
But
Either way.
good for you for even getting close. You got the 30 right, buddy. San Diego, man. I did 42 miles today. When are we going to run on the beach? Tomorrow?
Yeah, we can do tomorrow after one. Yeah,
Yeah, let's do an afternoon 2 miler, 3 miler.
sure.
We'll get a couple
We'll set
photos
it
of
up.
your fans.
We'll set it up. Now let's talk about the stock market. Last week,
This is a swing trader moment here, maybe both long and short. So I'm sure there's good ideas.
uh, yeah, it just depends on your time frame. So last week, the main event was the Fitch downgraded US credit rating.
You don't know who Fitch is.
One of the credit rating agencies, like the top three credit rating agencies.
Mm-hmm.
And the last time it happened was in August, I think 5th, 2011. And at that time, I mean, the US markets were in a pretty steep
It
sell-off.
was pretty volatile, right? Back then.
Yeah, so I mean, we can go back in time, let's say 12, 2011. And then you can see even ahead of that downgrade, markets were kind of crushing. I mean, there was an issue with the debt ceiling, and then the downgrade came like towards the end of the sell-off. But there was a pretty
Oh my God,
significant.
the S&P was only at what
It
was
dropped
that?
20% in a few weeks, but ahead of the event. So, and then at the time, ironically, money went to the perceived safety
What about weekly at that time?
of treasuries.
Is that?
Okay, this is weekly, but of treasuries. Let me go back to the S&P,
Yeah, go back to the S&P
and
weekly.
then we can extend it to, let's say, 2012, so you have like a bigger picture. So this is that moment.
So the market was recovering like right now. It was rallying for years, and then boom.
Yeah, it just tested, I don't know, something. It was a pretty quick 2 week, 20%, 2-3 weeks. But either way, nowadays it's a little bit different because, as I said at the time, money went to the perceived safety of treasuries. As you can see, treasuries rallied. I mean, they downgrade US debt and treasuries rally. And I don't know what gold did. Gold kind of went up as well. But let's go back to 2023. And right now, as you can see, treasuries are not rallying really. Like, they accelerated lower.
With serious volume. They broke that 100 number.
Yeah,
Rates are creeping
that's
higher
the interesting part. So interest rates continue to rise, and tech stocks. It's a miracle how well tech stocks have done, considering how much interest rates have continued to go up, considering crude oil kind of perking up as well. And I think a big reason for that is just last year's drop or huge correction just caused many of those tech companies to make major changes
Sure.
in the way they spend.
Yeah.
So a lot of them cut costs, cut stuff, and they improve their earnings. As you can see this year, most of them are really crushing earnings estimates by a wide margin. Here's Microsoft, they beat estimates by 80%.
Yeah.
Almost back to 52-week highs. Google did the same thing. So all of that cost cutting is really paying off. The question is for how long, but so far the rises in interest rate hasn't really mattered, and the entire year. And one of the major reasons for that is just the market doesn't believe that inflation is an issue anymore, and it just expects that interest rates are gonna start coming down. But so far we haven't seen that. Either way, we're still in the midst of earnings season. As we mentioned, the big tech continues to beat estimates. The market is a little bit wobbly here. I mean, volatility has definitely picked up, especially that after that downgrade, the VIX kind of perked up a little bit.
VIX perked up to, I don't know.
And then we're starting to see some big reversals intraday. I mean, as you saw on Friday, market was super strong. First half of the day finished super
well.
weak.
VIX got up to 17. Okay, so
look at this volume here, Howard, on the red days. Volumes.
Yeah, Google was looking good to close above 130, and I just backed, like, it just was looking really good and just came back. Amazon saved the market a little bit. The Apple break, like just that
under the 50-day closing really weak.
break.
So
listen, it is the market, right? Like, it is the market, and it's not growing fast, right? iPhone's kind of saturated, so it is the market. It's law of large numbers. It's not going to crash, and if it crashed, it would be a buy. So you kind of, you had JP Morgan saying no recession. You had the Fed. Everybody's gaming that by May. If you look at the curve or the Bloomberg numbers, Charlie was saying, you don't get a cut till next May. That's what that's what the betting lines are, or whatever you call it, like the possibility curve that he looks at on Bloomberg. So it's not like you're going to get an emergency cut. The Fitch downgrade was laughed off. To be honest, we all laughed, which is the opposite of us not caring, right? Laughing is a way of dismissing, and you got to be careful of dismissing even the dumbest, even something that people haven't taken seriously for a while. And that was a good look back at history there. You can laugh all you want, but this is not. And then you have kind of a move into commodities, right? Steel stocks have been doing great. Transportation stocks have been doing great. Stuff's getting built, right? Like, so it's not like, but it's just not going to be the second half of the year, as JC and I were talking about, won't look like the first half of the year, right? Because you need the leadership. And right now it doesn't look like Apple. And they've had a great run. Facebook, quadrupled. Where did Meta close? If closing above 300 is still just super strong. Yeah. So
I'm still above the 20-day.
Yeah, this would be a big week. There's a lot of earnings. I'm wearing my degenerate hat, DraftKings. I don't gamble, but the stock just continues to hold in there. It did close kind of below the mid. I mean, again, like relative strength wise, look at Penn, which reports this week. I mean, they basically acquired Penn, right? They acquired DraftKings. I mean, Barstool. No, PENN. So it's not all like they're the poster child for Degenerate. And go look at the monthly. He was like, if you look at that run from like 4 to 100, and that was a bubble. Right? This company's laden with debt. They paid, I don't know, $400 million for a degenerate media business that can't build product, has a great community, but it ain't worth what, $500 million. And so it's not easy. Like, you have to really understand the trends. And you can't, I like to just put everything in a degenerate trend, but you've got to have great product. You have to do all the things now. You have to have great marketing and customer acquisition. So it's not the same for every company. I mean, look at this stock over the last 2 years. While DraftKings has bottomed, while Coinbase has bottomed. So anyways, I just think it's a great market for traders and investors right now. There's something for everybody. And what I keep telling people, Ivan, is in my market, prices keep coming down. So while you had this, while Facebook quadrupled, SoftBank's still writing off companies like in a laughing stock way. Venture deals, venture portfolios are still being marked down 50-60%, while Apple, kind of doubled off the bottoms, or it's up 50-60%. So there's this huge dislocation where the public markets bounce, but private markets continue to get marked down. So
which one is leading?
And so we're just not seeing there's just a lot of stuff that doesn't match, because you can get 5% in a money market account or in your Robinhood account, and that's real money. And if people see a couple bad months here, a volatile, they get comfortable with that 5%. So this is a really important couple months. Seasonality wise, though, it's kind of been in the cards. August, September are generally tougher months.
Yeah.
And much like Fitch, everybody says, well, everybody knows that so it won't work. But be careful what you dismiss. Seasonality does matter, and Fitch matters to certain institutions that have to sell based on
exactly. Yeah.
US, who are you going to do business with if you're not the US? So again, to those that got long and rode this the last 6-7 months, there's nothing wrong with booking some profits and staying disciplined. But I think there's good opportunities. Where do you see strength? I looked at this. I was looking at leader stocks. TT, that just broke out. It's another kind of like industrial. TOM TT.
TT. There's
a stock that I never heard of. Go to the monthly, and it's an industrial stock.
Yeah, anything climate control, it's been doing well.
This is a fucking 20 bagger. Never heard of the ticker until today. So this is a beautiful world when there's just I'm constantly amazed. Yeah. And then if I pull up StockTwits, I'm going to look up TT. There's something else that I talk about in a world that everybody knows Tesla.
Nobody knows about this one, yeah.
It's followed by 600 people. So here's a stock that's up 20 times.
That surprises me.
Maybe not Tesla numbers or GameStop numbers, but up 20 times. And there's 600 people on StockTwits following it, right? And so we're getting to a point where you have to go beyond FANG to find returns. It's been that way for 5-6 years, and you've got to expand your horizons. What are the things that you do on a weekly to discover new ideas, Ivan?
So I look at stocks that are breaking out on really high volume, like at least 3 times their average daily volume, even 5 times is even better. So stocks that are
you run that screen on FinViz or CoinFin?
Yeah, FinViz. So they need to be up 8 to 10%.
Can you share that screen if people ask me and want to?
Yeah, I'm sharing it right now. I'm telling you.
If people want to copy it on FinViz or something.
Oh, that's all you need to do. Relative volume above 3 or above 5. Then you can put current volume 1 million shares, and then price above 5. You can go lower if you want to, and then up 10% for the day. Because a lot of swing moves and longer term moves, they start that way with those huge volume breakouts and even breakdowns if you want to play the short side. But it's a very simple screen, that you can work with. You don't need to enter the same day. You can just put it on your watch list and just wait for a tighter range to enter.
Got it.
It's a simple approach. And then another one is you can just look for stocks that are trending up, that have high relative strength, let's say up 30%, 40% for the past 6 months. They're trading above their 20-day, and then their 20 is above the 50, which is above the 200-day. And then you look for some range contraction where you can enter with a tight stop. And even if you're wrong 50% of the time, the times when you're right, you're gonna make 4 or 5 times the money that you risked. So it's all about the odds. It doesn't matter the screen that you use, really. It's just about the execution. Because you know what the mistake most people make. You buy a stock. Let's say you buy a stock with a stop of $1, and then the stock goes up 50 cents to $1, and then all of a sudden people get worried that they're gonna lose their profit and they sell the winners very quickly. And then most people do the opposite with the losers. The stock will drop to their stop loss and they say, oh, let's give it a little bit more time. I don't want to take it now. And then $1 becomes 2 and 3. So the issue is in execution. It's not in the screens for most people.
Good point. Case in point, a few of these today that I'm getting spun out of. Shopify got spun out of any. I mean, I still own the stock, but anything I added kind of chasing.
Yeah, I mean, the earnings were not bad at all, but the market.
You can't figure out what. Listen, if you're going to hold these things for long term,
and what will be surprising?
He was unhappy with their margins. I don't know. Like again, these things are not cheap, so you can't fight these things. And you know, MRVL, which I kind of been pressing, it's just not. The whole thing, like that'll succumb if the market gets weaker. I started a position in Uber.
Uber, I mean, great earnings, but still selling off after earnings.
Yeah, I just started buying. I just love the company at this point. They've just stayed. I just use them more in the last year than I've ever used them for Uber Eats. And today I used it. I spent $150 there just instead of driving with my bike to go to a long. It's just cheap to just get in the car. It's such a luxury at this point to get in a car and not have to drive, and I can catch up on some work early in the morning. And it would have cost me $20 in gas and aggravation, and instead it cost me $140, but it was just the ease of throwing my bike in.
And do you know what percentage they're making from the rights? It's pretty high. The percentage that Uber is taking. It's pretty high. It's usually 30 to 50% they make from each.
I think they are. I think the more I think about it is like the drivers have to get religion around getting electric vehicles. It's just that much. The margins are gonna get squeezed up where they have to go electric, right? So we'll see how that plays out. But if Uber can figure out a way to get every one of their drivers, or as many as the good ones they can, electrified, they're going to make more money as a driver.
If you talk to the drivers, which I often do when I take Uber, like all of them complain, but at the same time, they're super grateful that the company exists and basically it's their major.
So why? They complain like it is weird.
They complain about the cut because I took an Uber to the airport like a few weeks ago. I think I paid something like $15 because I live relatively close. And the driver didn't know how much I'm paying. The driver told me I'm making $5 for this ride. So, which was interesting to me.
Yeah, I think the Uber Eats, I think the luxury category is still a massive category for them. I consider myself now in that category where I'm price insensitive because I don't use it that often. So I tip. If they drive well and leave me alone, I tip very well. So they do make money. But yeah, I don't know. UberX is a tough one, but I rarely use UberX unless I am going to the airport. I prefer to use a bigger car and be pretty clear that I'm in no rush with I try and give the instructions now. I was like, dude, get me there alive. They are human beings in the front seat. But anyways, that one's interesting to me. MRVL is just purely this TT showed up on some screens from some good investors.
Yeah, I mean, you all-time highs basically. That's a screen.
The industrial sector still looks strong. Transportation looks strong. I'm trying to think what else. But I mean, listen, if Apple isn't really growing and at the pace that it needs to, it'll be hard for the market to really advance. But that doesn't mean there's not a lot of underneath surface. Like Apple and these things pause for a year, there can still be some great some gains.
Yeah, I mean, absolutely. There'll be rotation into other companies that are growing much faster. But
the rate picture is key. Like that TLT chart is key. They got to reclaim that. It needs to be a false breakdown in rates. But right now, that's just an acceleration on high volume. So, if it reclaims 100 on those trend lines,
it's possible.
Here, it's just like, why add new stock positions? Rates are going higher. And speculation, by the way, speculation is still insanely high. People gunning options, weekly options I see on StockTwits. I see trending on StockTwits. Again, it's little things that I've learned over 20 years. Seeing these NFT, the index that tracks NFTs down 92% from all-time highs. Okay, much like the internet.
92. Wow.
There's none of these that are Amazon. Okay, like Bored Apes and the other.
Did you ever buy any NFTs?
No, I kind of would. I think I've been eyeballing a punk just because it truly is the original piece of art, but there's still, it still doesn't interest me. But it was close enough where like the Bored Ape is just abused venture capital. What was interesting is just abused by venture capital. But CryptoPunks have no utility. It's art. And so, okay, that's the original kind of Mona Lisa of digital. But if the NFT index is down 92% and I see nothing but speculation still going on, I worry. Because raising interest rates has not quelled speculation at all. And I don't think the Fed can control that, right? Like when you have micro betting and YouTube and TikTok and influencers, I don't think there's no playbook for that kind of distribution and speculation. So I think a lot of this interest rate rise is affecting the economy, but it's not affecting the fringe speculation. And that's global now, right? That's like from South Korea to China to Africa to the US. It's just, global speculation that's not tied to interest rates, right? And so I don't know. How the luxury stocks held up last week, like LVMH, just quickly?
I mean, let's take a look. I think in general, the vast majority of stocks are pulling back. The vast majority of the market is currently in a pullback, choppy mode, which I wouldn't be surprised if we see in August and September. You mentioned something about great trading opportunities, like just from a swing trading perspective, the market that we saw from May to July was perfect trading environment, low volatility, easy to trade. And I kind of have a feeling that now in August, we've entered a little bit a different tape where there will be a little bit more shakeouts and more volatility. So it will be a little bit harder to really swing trade. You need to be a little bit more nimble in the next couple of months.
Yeah.
Still a bull market.
Decide why you own it if you're putting it on your sheets today.
But yeah, even in a bull market, you can see a 5-10% correction in the indices, which means 20%, 25% drop in other names.
Yeah, you saw a quick 5% on Apple, another 10%, would get people talking.
Yeah.
Yeah, I mean, Apple's the stock here. I mean, that was a nice, smooth uptrend. Facebook's was volatile. He continued, I love everything about the brand change of Twitter. Ivan, I don't know. Do you have an opinion on that? You don't care. I love X. I just fucking love.
To me, it doesn't matter so far. I mean, I'm starting to see a little bit more engagement and more people following me for whatever reason, but I still don't have a strong opinion about it. I'm using it, and that's it.
I think Instagram, Pinterest, it continues to do relatively better than like Snap, the fringe social networks. I think they're pretty much a goner. I mean, even though they own their market, there's just not enough. There's just not enough there. And I think he had a chance to use the stock price to get into some physical.
Oh, 17 billion. How much did Elon Musk?
I think we'll look back and it's still early. He's got a $17 billion market cap. But could he go physical in that world to get to the next level? Because digitally, he just has not executed. This thing has kind of been dead money. So I think it's going to be a lot of, I think the next batch of creative leaders, I think you see a lot of ZERP founders, right? If you look back at like Square, I'm looking at Square and I'm looking at PayPal and I'm looking at these fintech companies, and they were built during a ZERP kind of world. And I think they started believing their own bullshit. These are tough businesses with low margins, highly competitive, dealing with the long tail of retail, which in and out of business, a lot of closing, you know what I mean? And like these things are run not well, and you're paying the price. Like look at Square, like bad acquisitions, kind of management by iPhone. Where's it gone in the last 6-7 years? Zero. Still a huge company. It's still a lot of market cap that could come out of that company because it's just so poorly executed.
Yeah.
And then I look at PayPal, still like 100 billion. And like, again, like
70.
70 billion and like low margin business, like
Yeah.
a lot of acquisitions to digest, low margin businesses, high interest rate environment. But yeah, so fintech's tough. The bank, how do the banks look? Mercado Libre is an incredible company.
Yeah, the beta estimates, I mean, they've been in a range the entire year, so they still haven't broken out. So they're kind of digesting constructively here. The one to watch, they had a big volume breakout last week.
Not cheap, still trading at like 50 times earnings.
Yeah, I mean, the banks,
Yeah.
they're just going sideways for the
Which is
most
fine.
part, which is not bad. Which is not bad, yeah.
Banks seem strong. I mean, I distrust everything they said, but Jamie was out saying no recession, which is fuck him. But at the same time, I do believe that the banks are in a good position, right? Deposits are high, 5% just got people sticking their money in their accounts, you know. So they're not in trouble. But you know, with student loans coming out, like the SoFi number is interesting because it's just a cult stock, right? And it just the fans were so excited, and you can see how quickly it gave up. It's again because it's still a tough business, and you know the loans may be guaranteed by students, but like you know people are going that market is going to feel poor, and you know people may love that company and that stock, but it's still a fucking expensive company, $10 billion. In a low margin business, you know, so it's still what, no real earnings.
Yeah, they're still losing money, yeah.
So I said there's still like fanatical behavior in bad businesses, which you know kind of makes me still nervous. But you know, I'm not bearish. What's your tone? You're looking on both sides.
I'm not bearish. I'm just a little bit more cautious. I feel like I'll need to be more trade less maybe in the next month or so, use more position size and just be more nimble. That's my feeling, but I don't know if it's going to be true. But just from what I saw last week and the week before, I have a feeling that the tape has changed. But let's see. I might be wrong. We'll see.
Okay, I got us down for 4 o'clock run on beach. Does that work?
For tomorrow?
Yeah.
Sure.
Okay, run on beach 3 miles, 2.5, 3 miles tomorrow.
Sure, Howard Miles. Let's do it.
Okay, buddy. I'll see you tomorrow. Okay, see you, everybody.
Bye.